All right, everyone. It's time for another weekly wrap. It's Friday. What is this, March 9th? And the market's still ticking here a little bit, but it's about 2:30 Eastern Standard Time, so most traders have gone home already. One of the things that I wanted you to notice right away is the market came back down into this support line after breaking out. If you remember last week, I was talking about the market breaking out of this area. You can see that the market returned back inside of the top end of this breakout region and then traded right back down to the edge of it. This is a very good case for being able to plan ahead. And that's really the whole purpose of these weekly wraps, as well as all the other videos that I send out, are to give you tools to start planning your trades. You know, the biggest mistake that rookie traders make is that they don't plan what they're doing in the market. I talked about that in this morning's video a little bit, and I want to fill that in a little bit more. You see, when you're looking at the marketplace, there are a lot of options, meaning there are all kinds of Fibonacci tools, moving averages, support and resistance lines, pivot points, almost without end. But really, in the end, what matters is price. If price is closing down or if price is closing up, and how price is relating to past highs and lows. You can see here and here we've got three price points here. So watching how price relates to all three of these is going to be critical as the market starts to trade. In fact, you can see here the market this week early was far below our prior support area we were looking at, but look at where it's closing now. It's closing right into support. So what does this mean? Well, I've been talking for the last several weeks about this exact phenomenon. What we can see is that late in the week, buying has come into the marketplace. So the market is closing up. In fact, these little green lines that I have on here is the difference is the midway between the high and the low. Because what I want is a very quick way of looking at the market and deciding whether it has tipped the balance point. Now look at this. Look at what happened on this week. Virtual mirror image of what is going on right here. So we've got a reversal signal here. We've got a reversal signal here. What's going to be critical is for us to watch and see how the market trades in the upcoming week to decide if the market is indeed going to be pushing its way back up and possibly even reversing for a breakout, or at least reversing for a test here of this $2 level. So the point here is not to try and get to a place where we can predict the market. I mean, nobody on this planet can predict where the market is going to go. It's impossible. But what we can do is look for and identify areas where we should see signs of a reversal or signs of a continuation. That's the whole point. And if you get that, if you really understand that concept, you are going to be able to trade profitably and successfully, because you're going to move out of the place where you're constantly looking for a reaction in the marketplace. In other words, where you're just sort of staring at price moving and looking to do something. That's the place where traders can get absolutely decimated in the markets and lose all of their money. If you get to the point where you can start identifying zones, and believe me, I've been talking about these for weeks, and if you remember, I was talking about this zone. In fact, it was just a little bit wider than where price actually went. I believe my zone went all the way down here. The point was, though, that I wasn't necessarily looking for the market to just turn on a dime.